Hello guys, my name is Colin and this is Colin Talks Crypto. I hope you're having a fantastic day. It's been several months since I've done an update, so I think it is time. So in this video, it's probably going to be a bit of a longer video, and I do not expect you to watch the entire video. In fact, I would encourage you to go to the timestamps in the description below or in the comments below and just view the portions of the segments that interest you. I by all means do not want to torture anyone with the entirety of a video that they're not interested in. But that being said, it's been a long time since I've really updated you guys, aside from what I do on Twitter, on all sorts of different topics. And, you know, I view Twitter as sort of like my daily diary, if you will. I mean, that's where you can find my latest up-to-date thoughts on everything from moment to moment. But in this video, I'm going to really elaborate on some of these ideas and really dive in deep. And if you're not following me on X, I should say, not Twitter, then you will now have an up-to-date picture on where I stand on things. And I've made some notes here. That's what I'm looking at, so I can kind of have a rough draft of what I'm going to be doing here. So I'll try to make this efficient, but also thorough, and just touch upon many of these different topics. Okay, so let's start with my change of view from bearish to bullish. And this may come as a shock. This may come as a surprise. This may unsettle you. You may be furious with me. I get all sorts. It's amazing how many different reactions I've had to this. And so let's just go through it real quick here at the beginning of this video so it sets up the rest of the video. I wrote up this post on X and I said I would like to formally acknowledge that my bearish outlook on Bitcoin's short-term performance was incorrect. It did not visit $18,000 to $23,000 first as I thought it would. And if you recall, I have been calling for a drop down where I could perhaps load up some more bags before we rebound. And that's what I thought was the primary case. And so let me read the rest of this and then we'll get into what I changed. And I was kind of joking here. I said, I bow before the ETF gods and admit my folly, doubting their greatness. You know, Bitcoin always wins. Bitcoin always appreciates in value as the years go on. And how foolish of me to doubt them, right? But really, you know, there's a lot of volatility in the crypto space. And if you're skilled, you can take advantage of the volatility, but it's a riskier proposition rather than just holding. And that's a personal choice. And actually I said, to be fair to myself, the only thing that I could see causing a premature bull run would be a Bitcoin ETF. But I didn't think it would play out so soon. So my timing was off. And after I've had a little bit of time to reflect on this, I think part of what happened is I got caught up in the difference between the buy the rumor and the sell the news. And I think what's happening is the market is potentially pricing in the ETF as a buy the rumor event before the sell the news event occurs, perhaps in January or really any time. I mean, the ETFs could get approved in November, December, January, or they could not get approved at all. And that I think would be a real disappointment to the crypto space, not just disappointing from a sentiment point of view, but also a price point of view. And I said, luckily I didn't sell a single Bitcoin as it didn't seem worth the risk to me. And that's because I've been holding for well below $20,000 from previous bull runs. Not that I entered this last bull run at a good price. I didn't. If you've been following me, I missed the bottom essentially. Credit to CBBI, the Colin Talks Crypto Bitcoin Bull Run Index at cbbi.info. That's the website, cbbi.info. It called the bottom 100% perfectly. I think it has a score of 2 when we actually looked at where the bear market was at that point, and it was spot on, and I doubted it, and I shouldn't have, and that was my mistake. But you just do the best you can, and I'm done beating myself up. And so I think I'm going to in the future, give CBBI a higher level of confidence in my decision making. Not that it's going to be the only thing I rely on, but I think that it makes sense because the way I look at it, sorry, this is a little bit of a detour. This is a very freestyle video, guys, is CBBI is powerful because it aggregates 9 different metrics. And if you're not familiar, it's basically an aggregate of 9 different popular, historically fairly accurate Bitcoin metrics that indicate tops and bottoms pulled into one index. And so like currently, out of a score of a potential theoretical arbitrary 100, we're at a 54 in terms of between a bear market bottom and what we think might be the bull run top. So we're about halfway right now, which as far as this part of the cycle is concerned, it's fairly good actually. And I have all these metrics disabled. Okay, so here's all the different metrics. There's 9 of them, and here is the price chart with the rainbow color, and then the CBBI score, which is in blue, overlaid on that. And you can see that at the last bear market bottom, where Bitcoin was around 15,900, 15,700, we had a confidence score of 5 down there, 3. Okay, so it was about a 3 at the low. And actually, it was at a 2 before we adjusted the formula. It was actually even closer. But every full 4-year cycle, we take a readjustment just to make sure it's as accurate as possible. Because, to be honest, we don't have that much history. I mean, Bitcoin is not nearly as old as something like gold or silver, where you have hundreds of years of data. We have, 13 years, really like 10 years of usable exchange data, and only several cycles. So it's still sort of in a beta stage, but I guess this is my way of showing you that I do think that CBBI is important. And the realization I had was because if you think about it, in technical analysis, if you have a confluence of indicators all saying the same thing, that's much more powerful than a single indicator or analysis metric by itself. And like, for example, if you have a bunch of moving average lines and they all converge, you have a 200-day, a 100-day, and a 50-day, and they all converge into one tight range, that's a confluence of support or resistance, depending on where your price is, above or below that. And it's much more powerful than if one of those was by itself. And you can also use not just moving averages, but you can use like support and resistance ranges of the price itself, where maybe the price, for example, bumped up against the $20,000 price range forever and finally broke through. Well, that means that $20,000 is a pretty strong, at that point, it's a support level when you're above it finally. And so let's say you had the $20,000 price range coincide with a 200-day moving average, a 100-day moving average, and also, for example, maybe the R-HODL ratio and the Puel multiple were also saying it was like a support zone. That would be 5 points of confluence, and that would be incredibly powerful and reliable. It's not 100%, but I think your odds go way up when you have that many points of confluence. And so this is my way of painting the picture for you, my recent realization. I mean, I created this, right? But a really good way of articulating why it's so powerful potentially is because it's showing you points of confluence at the top and the bottom of potentially up to 9 different metrics, historically accurate metrics. And so if all 9 of these are saying, hey, we're at the top, I mean, it's kind of foolish to ignore that. That's the way I look at this now. It's not that it's a guarantee, but it's foolish to ignore it. That's a powerful sign. And in fact, even if you had just 6 out of the 9 metrics saying that we were at the top, and you had a score of 90 out of 100 or something like that, I mean, pay heed. I mean, that's a lot of metrics saying, hey, red alert, time to sell. And so really, the CBBI is a confluence index of tops and bottoms. And that's probably the most unique way I've ever portrayed this index. But anyways, that wasn't even supposed to be in this video. I just got sidetracked there. So now let's jump back into the video. That's CBBI. If you haven't visited it, go to cbbi.info. Okay, that's the last plug I'll do for that today. So back to my change from bearish to bullish. And I found this cool image here. I thought that was kind of cool. It's like a god holding a Bitcoin symbol. Do not distrust the BTC gods. They will guide you to the light, we hope. Okay, so that's kind of the first moment where I made my public announcement of a shift from bearish to bullish. Also, Now, there's some reasons why I was hesitant to be bullish, and I want to show these because it is unusual, and I think I articulated it really well in this post right here. But basically I said, I see a number of social media posts pointing to a Bitcoin bull run now. And this post was made right after Bitcoin had shot up to 35,000, just to give you an idea of the timing of it. And I said, if Bitcoin is indeed going to continue rallying above $35,000, the timing would be extremely unusual. Now, why would this be unusual? 2 big points. First of all, Bitcoin would be defying macro conditions. The stocks have been dropping for like a month or two. We have insanely high interest rates. We have an inverted yield curve, more inverted than we've seen in 40 plus years. We've got now finally increasing unemployment. I want to see another month of this to really make sure it's reverted, but it looks like it is. And those are all really bearish macro conditions. And historically, Bitcoin has correlated with legacy finance. As much as you hate or love that statement, it's just true. Like over the past 10 years, Bitcoin has been highly correlated to the stock market. And I understand that Bitcoin was invented as a way to decouple. And I think that's the intention really, is that it decouples. And on a long time span, I think that it will for sure. And it has gained value over time. But when I say it's coupled or when it's correlated, it's because every time you have a massive drop of the stock market, Bitcoin also has a massive drop. They follow each other like that. It's not like when you see a crash of the stock market, Bitcoin goes to the upside. They follow each other more or less in the same direction. They're directionally correlated. And I would love to see that break someday. But that's one reason why I feel like Bitcoin rallying in the short term is unusual, because we have this legacy economic situation, which is really quite bearish. And yet Bitcoin has been going up. And if we're saying it's going to continue to go up in light of that, I mean, that's just frankly unusual. Secondly, Bitcoin's bull runs typically accelerate after a halving event, not before a halving event. In fact, there has never been a Bitcoin bull run in which the acceleration portion of the bull run occurred prior to the halving event. In fact, usually you have a correction after the halving event or something like that. That happened in the last 2 cycles, not just with the pandemic. But usually, always so far, Bitcoin's bull runs accelerate. That final vertical, parabolic, euphoric run up happens after the halving event. And what these posts that I'm seeing on social media are saying is that we're suddenly going to have a premature bull run. It's going to happen basically before the halving event occurs. That is very unusual. I mean, there's been no supply shock yet. And you could say it's been, factored in or priced in advance, but you could also have said that for every bull run that ever existed before. And that wasn't the case, because the accelerated portion of the bull run happened after the halving event. And so with those 2 factors of why this is unusual to see a Bitcoin bull run prior to the halving event, the only thing I could think of which would explain this non-typical behavior is Bitcoin ETFs. And the explanation would be that more Bitcoin is being bought than usual at this part of the market cycle by A, either retail anticipating this ETF approval, and or B, institutional acquisition of Bitcoin to allocate toward the ETFs prior to their launch, because they do have to fund their ETFs with spot physical Bitcoin. And so that's my observation of the market right now. It seems to be behaving irrationally, except for if you give it Bitcoin ETFs as the answer to the why this is happening. And I think that is what is happening. I think that Bitcoin ETFs are the explanation. Whether it's retail or institutional acquisition of Bitcoin or both, I think that Bitcoin ETFs is the only reason that we're seeing the price going this high this early in the cycle. And not just that it's gone this high this early, that's fine. I mean, that kind of happened last cycle too. It ran up to 14,000 and then it corrected back down. It's not to say that that can't happen again. What I'm mostly referring to here is if we see a continued rally, what would be the explanation for it? I think this is the only explanation. If we saw a continued rally, we see 40,000, 50,000, somewhere in that range, in the next couple of months, that would be unusual. And I think that would be Bitcoin ETF fueled. keep in mind, I started this post with the word if. No one knows exactly where the cycle is going. And that goes for this video. I mean, I'm just giving you my take on things, and it's not financial advice. And I certainly don't want anyone making trades based on what I say here. I don't have any obligation to give you my thoughts at all. I just feel like sharing because I am so passionate about the space, and I've been wrong plenty of times in the past, and I've also made many good right calls. I mean, that's why I'm here today, right? I survived the bear market. It was painful, but I survived. Okay, and let's move on. So this is me kind of saying, hey, this is official. I am bullish on Bitcoin. The TA supports it, and the Bitcoin ETF narrative supports it. And so I talked to you about the Bitcoin ETF narrative already, but let's jump into a little bit of the TA that supports it. And there's a couple of posts. Let's start with this one. I made this post and I said, in regard to Bitcoin reaching $18,000 to $23,000, now that Bitcoin has broken above $32,000 decisively, I mean, it's closed its weekly candle above this range. That is a decisive, clean confirmation of a breakout above the $32,000 range. It's not as likely to return to the $18,000 to $23,000 in the near term. I want to be very clear about that. I still haven't ruled it out in the long term, but in the near term, it seems increasingly unlikely. I said basically only if Bitcoin broke back down below $30,000 and remained there would that option return back to the table. Otherwise, and you probably heard this phrase before, was it the trend is your friend? You go with the trend. And I do think it's still definitely possible Bitcoin could revisit these lower ranges after the current rally is over, but there's no telling when that might be. And definitely the possibility, in my opinion, returns to the table when and if there is a major stock market crash, sometime probably really heating up next year, but we'll see exactly. And we'll talk more about that later in this video, in this what seems to be becoming a very lengthy video. All right, good luck to me making a table of contents. That means I have to put timestamps to this whole thing. I do it for you guys. I do it for you. And again, I iterate here on the point of the economy is not out of the woods, but the delay can be almost intolerable for those waiting for it. And in the meantime, Bitcoin can do anything. And so I want you to look at this chart here. And this is really the significant moment for which I decided to become bullish on the short term. It's this upper yellow line of this huge zone, This is, I mean, if you look at the years down here, this is 1 year, this would be 2 years. So from here to here is over 2 years. It's 2.5 years, this region, which acted as first support, and then it broke through it here, resistance, and then consolidated for a year and a half, tested it and rejected from it right here as resistance, and finally broke through it shatteringly broke through this convincingly. If it had rejected off of this and gone down, that's where I feel like 18 to 23,000 was on the table. But the moment this happened, I had to recalibrate. And I do want to take a moment here. Like I saw a number, at least like I would say 3 individuals, not like that many of my total followers, but at least 3, maybe 4, who expressed like almost hostility toward me for changing my view. And I guess my simple reply to that is I was presented with new data, and it's almost like they acted like I was not allowed to change my opinion. It kind of blows my mind, or that I was like wrong for misleading everyone, but like no one had this information until now. And I admitted in my first post, that I was wrong about Bitcoin reaching 18 to 23,000 in the short term. And that's what happens in life and in trading. You make some right calls and you make some wrong calls. Like I said, I haven't ruled it out going back to that level eventually. I think there's a very good possibility we eventually get back to that range. And actually, I have some cash on the sidelines, and I would have loved to have put that back into Bitcoin down here around the $20,000 range. And I was waiting for that, and it didn't happen. So, the proof that I, stand by my word is like I'm still sitting on that cash, like it's in my account. So any price appreciation we see from this point up, that cash that I had allocated for this area is missing out. I'm missing out on that. And so that's me paying the price for my call being off. But luckily, 85% of my allocation is in crypto. And so thank God, I am seeing the plus side of that. But I guess the long story short is when you're presented with new data, you must reanalyze the data and decide if your thesis has changed or not. So, I'm sorry if this bothers anyone or hurts anyone, but I think it would be much more harmful if I hid the fact that I'm suddenly more bullish on the short term and pretended like I was still bearish. That would actually be the wronger wrong of the two choices. So I'm telling you, I told you the day that I flipped my, you call it bias or direction of the markets in the short term. The moment I felt like I was shifting bullish, I started posting about it on X. And here's your first video where I'm talking about it. So I've been very transparent. I guess if someone has a hard time dealing with that, just please unfollow me. And if you don't like me or you don't like what I'm saying, then unfollow me, because I don't need the toxicity in my account or in my followers and my feed. And if you get nasty with me, I will block you. I think I've shown that to a couple guys already, but it's really the minority, and most of you guys are awesome. And I really appreciate your understanding. And I'm doing the best as you are. We are all digesting as much Bitcoin information and trying to make the most rational decisions that we can. And I'm there with you. I'm not some supreme guru god or something. I'm just a guy who's looking at the charts. I spend way too much time every day looking at charts and reading X and Twitter and social media posts and charts and predictions. And I digest all of it and I boil it down to my concept of what I think is going to happen. And then that's my idea that I share with you. So thank you for allowing me to present my idea to you. And so I guess that says it. I'm bullish in the short term, and I don't know how long it's going to go up for. Are we going to hit 50,000? Are we going to hit 80,000? I think that's unlikely, but I'll show you some projections that are pretty freaking wild. And if they happen, okay, geez, then my cash that's sitting at the sidelines for this $20,000 buy missed out tremendously. That's why it's good to diversify. That's why it's good to not always be all in, all out. At least I can take advantage of the upside because I was diversified both with some cash and with some crypto. And I'll tell you right now, my current sell order for Bitcoin, because if it does rally, I am going to be selling, is roughly around, I forget exactly, 46,000 or 48,000. And so that's where I'll be selling my first small 10% tranche of Bitcoin. And then if it goes to I forget where, 55,000 or so, then I'll sell another 10%. I don't personally think it's going to hit 80,000 or 100,000 before the year is over, but anything's possible, especially in light of a Bitcoin ETF announcement, which could happen. And let's just kind of free flow into the next topic of Bitcoin ETFs. Let me see, I have some tweets saved up for you. We'll come back to this. This is the evidence for the price going up right now. Here we go. So I said, as far as Bitcoin ETFs go, I'm increasingly of the belief that the Bitcoin ETFs are a buy the rumor, sell the news event. I will attempt to approach it accordingly. And just in case you're curious, just because I got bullish on Bitcoin in the short term does not in any way negate my directional prediction for a stock market crash that's the largest we've seen probably in any of your and my lifetimes. Anyone watching this, I feel like we are getting ready for and approaching one of the greatest stock market crashes that you and I have ever seen. And that has not changed one bit. So I don't want people to think I've just flipped on everything and changed on everything. No, I have for a short period of time, probably between 1 and 3 months, become bullish. That's it. After that, it's back to bearish Colin. Okay, so that covers that. Now let's get into some, I'm kidding about the bearish Colin. I'm just going to call it like I see it. Like what do I see? If I see it bullish, I'm going to tell you I see it bullish. If I see it bearish, I'm going to tell you I see it bearish. And if you don't like it, I'm sorry. Look at this. Koosh. This guy on Twitter Kush Al Zadeh. I probably slaughtered your name. Sorry, buddy. He's a super cool guy. I really appreciate his posts. He's one of these like very bullish guys in the near term. He's saying Bitcoin to $70,000 by November. I don't know about that, but I would love to see it. Okay. So check this out. He has priced Bitcoin in 4 different prices and 4 different monies. Like Bitcoin as priced in the SPX, the S&P 500, Bitcoin as priced in the NASDAQ 100, Bitcoin as priced in the DXY, which is the US dollar relative strength over other currencies, and Bitcoin as priced in the Nikkei. I actually don't know what that is. I'll be honest with you. I think that's probably like the Japanese stock market. I don't know. It's a stock market somewhere probably. But either way, all 4 of these charts he's sharing have this same pattern of this triangle and a breakout to the upside over a significant resistance level. Now support. Same with the NASDAQ 100. Check this out. Here's the same triangle. Here's the breakout of Bitcoin's price as priced in the NASDAQ 100 up above both of these significant support line. Same with the Bitcoin as priced in the DXY, the US dollar strength. Actually, not quite the same on this one. So it did break out of this triangle to the upside, but it has not yet claimed or reclaimed this particular resistance level. But it's still bullish because it has tested, bounced off of this lower support line and massively broken new all-time highs. And then BTC on the /Nikkei or Nikkei, here's the triangle. It broke out to the upside and it's above this massive support line. This is tremendously bullish, guys. Like there's a lot of confluence of indicators going on here. Like I talked about earlier with the CBBI, this is another, what I would consider to be like a confluence of bullishness across all markets, across different asset classes. Very bullish, very bullish. So props to Kush for spotting that across all those different markets. If you're not following him, I would recommend you do because he really has some very bullish but good wisdom. And so I want to explain to you that is part of the reason why I became so bullish. You know, Bitcoin broke above this $35,000 price range decisively. And here is the weekly chart of the Bitcoin price, way zoomed out. And actually, I should really add another line here, the most significant line that we've been talking about for a long time here, right here, the breakout line. Let's make this super fat there. All right. So those 4 charts from Kush I showed you were contributing to my newfound short-term bullish opinion. That chart I showed you where Bitcoin right here is breaking up above, decisively above the 32,000 or so range and forming a pennant and confirmed weekly candle. These are all insanely bullish and I would be a fool to ignore this. And so here's what we've got on the short term. I mean, look at this. I mean, is this not the most bullish thing you've seen? It's not to say we can't get some fake out or whatever, but this candle is massive. This is a daily candle. And then you have this ascending wedge, which is a bullish continuation pattern. And basically it's going to likely break up to the upside after it consolidates through that range. So it's hard for me in light of all this to be bearish essentially. And I want to show you some other guys that like really shared some bullish ideas on this. So first of all, like I really respect Bob Lucas. Bob Lucas has an amazing experience with markets and he has made some very right calls. And I respect when he says something, I listen to him. I weight his opinion a little more than your average Joe out there. And so he says, Bitcoin, gorgeous looking monthly chart with new 2023 highs after a 5-month consolidation that refused to break down. Sitting in a very advantageous position in the 4-year cycle. Solid weekly candle confirmed a bullish upside breakout. This is what I was just talking about. And here's the candle he's talking about. And he gives it this target here, this upside target of about $46,000. He thinks that basically in the next couple of weeks, we're going to put in a high and then we'll see a low around maybe the beginning of December, it looks like here. This is his theory of what's going to happen, how it's going to play out. We really don't know. I mean, if we get a Bitcoin ETF approval, either it's going to just pump sky high, or maybe it's to sell the news. We'll see. But this is what he thinks is going to happen. But he thinks this is very bullish, and so that backs up this. And I absorb that, and I go, okay, you know, this is looking good. Hence my shift to short-term bullish. And also, here's another reason. Marubozu candle is a Japanese candle. It's a word for dominance. This is a Marubozu candle. It has basically no wick, or a very small shadow on the top and the bottom. It's like a solid green or red candle. Obviously red would be bearish and green would be bullish. And if you look at, this is a weekly candle of what just happened. It actually did close up here, and it's one of the most massive solid green candles, Marubozus, that we have seen in a long time, back to back with this other huge green candle. So breaking through the 32,000 resistance level with such strength is really like something that I think it would be very foolish to ignore. So I guess that kind of gives you the idea of why I shifted bullish. It wasn't just because I was being whimsical or changing my mind because I got euphoric because I saw so many posts on Twitter. It's because the TA looks like it is bullish, and so I'm going with it. Here's another thing. So Northman trader Sven Henrik spotted a confluence for the first time in history on the stock market, on the S&P 500 right here, of these two moving average lines. And this is again contributing to my bullish concept of what might be happening in the next couple of months here, because you take the 20 moving average, which is this blue line, and the 40 moving average, which is the red line, and you can see how they've never touched here. And this goes all the way back to 2014 on this chart. Well, here they are converging for the first time. And so that's a confluence. Maybe I should title this video like Confluence of Bullishness, because that's kind of the narrative. That's kind of the story we're looking at here. That's kind of the story we're looking at, is a lot of confluence. Now, if the stock market had broken down from here, that would have been incredibly bearish, because you have not only this horizontal range, you can see it on the tops of all these candles. Not only do you have that as a huge support range, but you also have this confluence of the moving averages of the 20 and the 40 converging. And so if it broke below that, then yes, I think that would have basically been the next leg down for the stock market happening on an immediate basis. And then I could probably not see Bitcoin defying that too much longer. Bitcoin has had a short-term rally while the stock market has been dropping, but you can only do that for so long, really, before Bitcoin starts to correlate, when everyone starts panicking and selling. You know, if everyone thinks the next recession is right around the corner, I don't think that Bitcoin is safe necessarily on the short term. There's a lot of panic that can set in, and people will probably sell risk on assets, of which Bitcoin is. But if you look at the chart today, I don't know if I have this handy, Bitcoin has rebounded. Let me pull it up. Look at this right now. As I record this video, Bitcoin really looks primed to break up to the upside of this triangle. We'll see. It could give us a fake out. Let me zoom in here. Sorry, I got to look at that. Look at that candle, 8-hour candle. That's today. Right to the top of this triangle. Ooh, I can almost taste it. Anyways, we'll see. It'll probably make me wrong and go down here and break down to here and then fake everyone out and then go boom to the moon. That's what I think is going to happen. Either just straight up or a fake out and then up. That's what I think the short-term forecast is for Bitcoin's price. But right now it's literally, oh, I'm sorry, you can't see the prices on the side here, guys. Let me fix that. Oh my gosh. There. Right now we're sitting at $35,000. Ooh, it's like, it's going to break through this while we're like on video. Let's come back to this. Let's come back. Oh my God, it's doing it right now. Look at that. It's a Marubozu right there. Look at that candle. Okay, we'll come back. What I was going to show you was the S&P 500. Here we go. Here is the daily. Let's zoom in on where we are now. Look at this. Okay, so I drew those lines. These are the two very powerful support lines that I was talking about. See how it touches all this range over here? All the way back. I mean, especially this upper line. It actually deviated below it and then rebounded above it, and now is decisively rejecting this range down here. So this is bullish in the short term. Let's check it out on a weekly here. Look at that beautiful green candle. beautiful rejection. So that's good. That buys us some time. I'm not saying that that's saving us from a recession. It's not. But it's buying us some time. And I think that's contributing to why we could see a bullish Bitcoin price in the near term. That's why, again, hence contributing to why I'm short-term bullish on Bitcoin. I'm trying to paint the picture for you with all that I've absorbed on why that is. So I could see us kind of bouncing up and then either retesting. And I don't see us surviving too many more retests of this level. I think that if we come back down, we're probably going to break through. That's my gut. But who knows? Some people think we're going to make new all-time highs. I'm not of that camp. I think that we're going to see a lower high, from this level, some kind of lower high. But we will find out. I can't see the future. I have no idea. All I know is that this is a very powerful reversion, this green candle to the upside. And so I think the momentum of this is going to last for a little while until something breaks in the system, in the economy. But during that time, that helps Bitcoin, because when the stock market is going up, generally, historically, Bitcoin has been assisted by that pump. You don't really want to see the stock market going down and expect Bitcoin to go up. So luckily, we don't have to fight like a salmon, going upstream against the water. We're all flowing in the same direction here with the stock market and Bitcoin. So I like to see that a lot. I just wanted to show you guys that. All right, and let's cover the stock market and this crash, this ultimate mega crash of a lifetime, this generational buying opportunity when it's at the bottom that I keep talking about. Let's just do a quick update on that, because I'm sure that's probably why many of you are here watching this. So I'm not going to rehash too much the pattern of this. In a nutshell, it's like every time we've seen a yield curve inversion, which is this red here, and this is the, I think the 10-year and the 2-year difference, and followed by a increase of the federal funds rate, which is the base interest rate that are set for banks, which then get passed on to consumers, and everything from mortgages and car loans, et cetera, and credit card debt and corporate debt, all is based on this federal funds rate. So every time these two things occur, there is a stock market crash. Historically, it's always been the case, or I shouldn't say always, but like predominantly, like massively predominantly. And two of the biggest cases were back in 2000 and 2001. And if you want to recap on this, go watch my last video. I'm just going to give you where we're at right now. So as I've said, I've been waiting for this plateau period like we saw these other times. The Fed likes to increase the federal funds rate and then hold it for a while, usually 6 to 12 months. They hold it flat. And it's kind of what we're at right now. Like the FOMC meeting just happened today. They held it flat yet again. It's not to say they won't raise it one more time, but it's looking like it's definitely plateauing. And so that's probably going to be the case for 6 to 12 months, depending on how inflation is and how unemployment reacts to that plateauing or that pausing of rates. But it's basically playing out exactly as I expect. Like there's not really a need for an update, even though the last time I did a video was like 3 months ago. Go watch that video. It's still 100% valid. Like, yeah, we saw, like, let's zoom in here. We saw a little rebound here, and a lot of people over here were calling for new all-time highs. And I was like, are we going to see new all-time highs? Like, that's crazy, but I guess. Well, we didn't, and it broke down. So now we have a lower high. And I think that this is probably the top. I really do. I think that this might be the top of the market back in December of 2021. And I think that basically we're making lower highs and we're bouncing. And like, for example, when we break this blue range, we're going to see a big leg down, probably retesting this local low from October 2022, if not lower. And you can see my target range here in purple. This is my stock crash target zone. If I click on it, you can see the parameters on the side there. You can see it's somewhere between May of 2025, May of 2027 in terms of time. And on the S&P 500, it could go as low as 1,500 or as high as 3070. That's just like my best. I'm trying to draw a target zone where I think it could go. So you can see, we're not there yet, but we do have to start heading that direction. We can't just go up forever. Some people think that, but that would kind of fall into my whole recession canceled philosophy that usually is very wrong. And usually when you hear the most of that is when it's actually the market's right around the corner from taking a huge crash, huge leg down. So this is what the market's doing in the short term. Yes, it did reject and bounce up, which is bullish. That's great. But I think we're going to probably make a lower high, but it'll buy us some time. It's going to buy us some number of months, which is exactly what we need for a Bitcoin ETF and to ride that pump and to not be, swimming upstream against that current. So I think that's pretty awesome. It looks like we've got the stock market behind us for the next couple of months rallying, and that'll do whatever it does, roll over at some point, and we'll go from there. But my prediction is still essentially exactly the same. I haven't moved this box. I still think we're on target for a massive stock market crash, the likes of which we have not seen in a very long time. And I think it's actually quite likely we test minimally the lows of the COVID crash, and probably could go as low as the tops of the 2000 and 2008 bubbles. So I guess that's all there is to say on that. As far as unemployment goes, let me tell you this. So there are people out there who think that, we're going to have a soft landing, recession's canceled, that I'm pulling this out of my arse, that I'm making this up, that I'm just a perma bear, blah, blah, blah. All I can say to them is they are not paying attention. And there's a clue that backs me up on this, and that's the unemployment rate. If they were right, unemployment would have already spiked. Unemployment, for example, people think that this is the bottom of the stock market right here. They think that that was the bottom. They're like, hey, we already had a big crash from, the all-time highs down to this right here in November 2022. That was a 27% crash, and that is a decent size crash / correction. It's decent. I'm not saying that's nothing, but I don't think that's it. And the proof that that's not it is, let's look at unemployment right then. So I've got my cursor, now line it up, now look down, employment's right here on the bottom. It's at its lowest. It's at its absolute lowest. Right there, it's like 3.65 or 3.6. It doesn't get lower than that. Now that doesn't make sense, because every time historically you've had a crash, like look right here. My cursor is on the crash of 2009, the housing bubble crash, and look at unemployment. It's 2/3 or 3/4 of the way up to its peak. It's rounded and it's going up. There's like a surge of unemployment that's not yet over, but it's on its way. And same with 2000. You have an increase of unemployment that has occurred. It's not at the bottom. When we're at the bottom of unemployment right here, that's when we have the peaks and the tops and the blow off tops of the market. So for anyone, I want to hit this home, like anyone who tells you that this is the bottom of the stock market, this is the S&P 500 right now, they are wrong. I would say 98% chance, because the unemployment, it was at its lowest. That's like a euphoric level of unemployment. It doesn't match. Now, on the other hand, if unemployment was like going up like this, and it was like up right here, it was at 8% or 10% or something other than the lowest range, and then we made this low, I would be like, yeah, okay, that could be the bottom. That could have been it. But we haven't seen unemployment increase. Now, why do we need to see unemployment increase? Well, what's the Fed's stated goal? Is bring down inflation. Well, how do they bring down inflation? They fuck us. Well, that's the short term. They bring down inflation by causing mass unemployment. Pardon my swearing for those family audiences. They bring down inflation by causing mass unemployment and by, putting companies out of business. I mean, that's literally what they do. I mean, my friend actually said this to me yesterday, and it rings true. He's like, basically, they make us pay for their mistakes. And it's so true. They printed too much money in the first place. They caused the massive inflation. They overspent their budgets. That's their bad. They should have stayed within their means. So now I'm not even touching the fraud that's involved, where the money went. But they did that. And then we have prices that go through the roof. That's the first punishment. And then second of all, the Fed raises the interest rates because now they have no other tools other than screwing us. And now we lose our jobs. Our companies go out of business. We can't afford loans. We can't buy houses because the rates are too high. It screws every sector of society, and all of us, we didn't choose to have them print all that money. So We pay for the mistakes that they made. And basically the Fed and the government makes us personally pay on a personal level and basically steals from us in the form of that hidden taxation, which is inflation. I guess I'm getting on a little bit of a podium here. But anyways, so this is why unemployment is important, because the Fed has to increase unemployment, as they've stated overtly. They're not hiding this fact. If they don't see unemployment go up, then their job is not over, essentially, is what they're saying. And so they're plateauing interest rates right now. They're detecting weakness in the markets. And proof of that is that unemployment is at 3.8 right now. You can see right over here, 3.8, which is a slight uptick. If you kind of zoom out the chart here, let me do it by monthly candles so you can see it a little better. See that on the bottom here? Right below my cursor, you can see how it's curving and it's going up just a little bit. That is the sign that they're kind of looking for, and they want to see that continued a little longer, hence why they're going to hold rates flat for longer. But we're getting there. Like I said, everything is going according to plan from what I have predicted and what I've seen historically. It's happening again. Anyone who tells you this time is different is frankly wrong. The Fed is like play by play doing the same playbook that they did last recessions. It's happening again, and last crashes. They're repeating the exact same playbook. So yes, that is my lengthy explanation for why the bottom is not in. This is not the bottom because the unemployment rate has not climbed, and also the Fed has not reduced or lowered the interest rates. You need to have interest rates back down to zero, which itself is a bearish event. It's counterintuitive, but it actually, it's probably because the market has so much damage caused to it by that point that even though the Fed is panicking when they drop it down to zero, they're going, okay, we've caused enough damage. Quick, drop it down to zero fast, save the markets. But by that point, it's too late. I need some water here. But I think you get the idea. So that's my recap on the stock market and why the bottom is not already in, why the Fed is doing the exact same things they've done before. And I called this 3 months ago. I called this 5 months before that. And it's happening play by play as expected. So I expect to see another 6 to 12 months minimum, that range of flat plateau interest rates, Fed funds rate. I expect to see the yield curve continue to, invert or uninvert, I should say. And it's not to say that it can't even go lower. Like inflation is sticky. We could see another bout of inflation come about. Pun not intended. We could see another instance of increased inflation. And if that happens, the Fed is going to perhaps raise rates further or hold longer. And that is part of the territory of inflation. But I think that that's the minimum case, is like the Fed continues to hold and the market feels the pain, and more companies are starting to go out of business and something is going to break. Well, things are already breaking slowly behind the scenes. Like you're having unemployment go up and you're having companies go out of business. Like WeWork just went out of business, and it was a multi-billion company valuation, and then now it's like tens of millions. It's crashed utterly. And that was a huge corporation. Things like that are going to continue and they will accelerate. And I personally predict there will be some massive bank failures coming on the horizon in the future as well. So just stay tuned, and there will be some shocks. There'll be long periods of kind of lull and, lower high, lower low, lower high, lower low. And then there'll be precipitous crashes that happen all suddenly when like Charles Schwab Bank goes broke, or Wells Fargo or whoever just goes bust. And that'll be the next scare, and the FUD will fuel that leg down. And we'll probably have several of those on the way down to the actual bottom of my target zone here, which we'll see if it's correct. But I think directionally, this is definitely what I'm expecting, is something down here. So plans have not changed, guys. We're on target. It's still happening. And bottom's not in, and we didn't make new all-time highs. So there you go. Also, a quick note on the subject of real estate. In my observation, real estate markets tend to follow the general economy and the stock market, but at a slower pace. So if you're looking at buying real estate, I would say you're going to get a lot better deals in 2 to 4 years from now, maybe even as much as 6 years from now. I really do think we're going to see some tremendous buying opportunities. And I feel like right now is the wrong time. We're on maybe this slight downward slope, just starting of the bubble popping of real estate. And it has so far to go. It really does. So I would love to own some like apartments or some, multi-unit housing for rental income in the future as a form of diversification, but I'm not going to be buying in these conditions. I want to buy when people are begging me for my money, saying, hey, we'll take anything for this property because we're so in fear of the markets. It's that reverse psychology. And that's what I'm looking at for potential future purchases to diversify my income or my wealth and income. Because it would be nice to have that passive income from real estate. And I made a post on X recently talking about real estate and why I do feel it's an important diversification asset, but you have to do it right. And there's wrong ways to do it and right ways to do it. And so search for real estate under my X profile and you'll find that post. And I just don't think it's time yet. I really think that we should wait a couple years. That's me speaking to myself. I'm going to wait 2 to 6 years before I even consider purchasing any kind of real estate deals. But I think they're going to be hot. I think that there's going to be some amazing opportunities because the bubble that we saw was just way euphoric, way out of control. I know I've been looking in my areas and I've seen it. And I've already seen some of the prices starting to come down. So I think, like I said, we're just tipping over the edge of that bubble and we're on the downward slope. And I want to move on to Ethereum here and show you something interesting. So while Bitcoin is making new all-time highs, like local for this year, as you can see here, this point here, see, is way above the beginning of the year here. If we move over to Ethereum, you can see that we are not making new all-time highs. This is where Bitcoin is, relative, is up here. Ethereum is struggling not only to break through this upper level of resistance, but also even, let me clone this, show you this level right here of resistance. It's actually having a hard time even breaking through that level. So this shows relative weakness to Bitcoin. Basically, Bitcoin has relative strength to Ethereum right now, and that's visible on the ETH BTC chart, which is right here. And let me move this up to a higher time frame. Let's do weeks first. So you can see my targets down here. I have the fire sale level at 0.025. I don't know if we'll see that. I think if we see that, that would be in the depths of a recession. But I think on the way there, we are very likely to see, for example, this major target of 0.037. And actually, we already surpassed my first target, which was way up here. So we have broken down from that. And so I removed that. But you can see that it's not looking good. These little hammer icons basically show every time where the ETH BTC price has been rejected from a major resistance level. And it just happened over and over and over again. And there's a significant level I feel right here. Let me draw this in. Basically from this point right here, the bottom of this wick, which is essentially 0.049 on the chart. And I think that there's a decent chance that the price could rebound off of that level. And maybe not for the long run. I think it'll rebound, test the underside of some of these levels, and then get rejected back down to this range and then break through it, possibly reaching as low as my second major target right down here. But one thing that will go along with such a rebound, if it does happen from this 0.049 level, is it would take altcoins with it. And I feel like this is the perfect storm for the next couple of months at the most, definitely the next couple of weeks. So I think what will happen is Bitcoin's going to break to the upside of that ascending wedge that I showed you earlier. And then Ethereum's going to hit this low range, this 0.049, as far as ETH BTC is concerned. And then it's going to rebound. And then from that point forward, ETH is then going to outpace Bitcoin for a short period of time, taking alts with it. And I think that the altcoin market will surge because generally when Ethereum does well, altcoins do well. So I think we could be in for a little mini alt season coming up here. And I mean, if Ethereum bounces from 0.049, for example, all the way up to, let's say it goes all the way up to here, 0.057, that's a pretty big run. It's not that it's making new all-time highs, but it could be a big rally for altcoins. And so I think this is a significant level. The other option is we just slice right through it, just like we did on the way up. It is possible just to do an extended period of time up and down without any, bouncing. And it would kind of make sense from like this is a distribution range, and then this is the break up and this is the breakdown. So it is possible that it doesn't hang around this range very often, but we might get some level, even if it's just a week, for example, of, a week of intense altcoin rally. So I think there's something here. I just don't know how big it will be. That's what she said. So yeah, that pretty much sums up what I think is going to happen for the altcoin market. I think that it's bullish for the next 1 to 2, maximum 3 months. I think that, hold on to your altcoin bags, because if Ethereum takes a bump up, and especially if Bitcoin takes a bump up, your altcoin holdings are probably going to have a nice little ride ahead of them. And this is the Bitcoin dominance chart. And you can see that it is bullish. I mean, there's no doubt about it. I've seen some people zoom way in. Let's do it. Let's go like, oh, here's a 6-hour chart. And they go like this. And they go, oh, look at it. It's like it broke down here. It's down from the high. It's bearish. Like, come on, guys. Like, zoom out a little bit. Let's go weekly candles here like real men do. I'm kidding. It doesn't really matter. But as far as the long time span of things, like this is the range. This is the significant support range. This is 48.8%. Like, not only has it broken through that, tested it and rejected and gone to the upside, it's also done the same thing with this particular support line. It's literally hugged that line and rejected and rejected and bounced and bounced and bounced and bounced like 5 or 6 times in a row, and then shot up. And sure, it's going to have a little correction. Maybe it even comes back down here. I actually don't think it will, because we're going to see that breakout from that short-term wedge. I think it's going to go higher actually, but at some point it could come down as far as this line and retest it and still be massively bullish. As long as it's above 48.8% right here, it's a bullish Bitcoin dominance. And so anyone who tells you it's bearish is just really like zoomed in way too far on the chart. Bitcoin dominance is bullish. And actually, I think that Bitcoin dominance, before it really tops out, is going to minimally hit like this range right here, minimally. I think that even higher than that is possible. I have to look over to the side because my monitor is being blocked by my camera. 58.2%. 58.2% is sort of like my base case bullishness for Bitcoin dominance. I think that it's possible it could go higher than that. It could easily go like to here, for example, 63%. So I think somewhere between 58 and 63% is a likely ending zone. And I wouldn't rule out retesting the all-time highs. I mean, if we have like a Bitcoin ETF approval and the market goes euphoric for months on end, for example, yeah, it could rocket up here. I mean, there are periods in time where, like, just like the inverse of this, where there's red candle after red candle after red candle, and it goes from 61% down to 40%. That's a 21% drop. Well, we could see a 20% gain in, what would that be? 50? Yeah, we could see a 20% gain in just as short a time. So markets don't only take the escalator down that quickly, they can also take the elevator back up that quickly as well. So that's my view. Bitcoin dominance is bullish and probably will remain so. I want to end this with 2 things here, 3 things. Look at that candle. First of all, I really want to recommend, if you want to increase your education on the economy and your economic literacy, this was shared to me actually by Eric Voorhees, awesome guy. And this is an audiobook. Basically, you can just listen to it, by Murray Rothbard. Believe it or not, this book was written in 1963. And it's an amazing piece of work. It's truly eye-opening on the subject of money, the economy, and how incorrectly it is operating today. It really is mind-blowing. And it actually perfectly makes the case for why Bitcoin should exist. And it did so 60 years ago. It blows my mind. After listening to about 3 or 4 hours of this so far, I'm about a third of the way through, I guess. I feel strongly that this should be a textbook primer in every school for every person. And there's probably a reason why it's not, because the government wants you to remain ignorant so that they can manipulate you like a sheep. And they can do things like print money and steal your money through backhanded inflation by increasing the monetary supply instead of, direct, overt taxation, which they also do. So I highly recommend this to you. I'm not getting any kind of kickback. This is literally just me saying, hey, I think you should spend the time, spend several hours. If you don't even finish the book, that's fine. Just do like the first 2 or 3 chapters. You will come back a changed person. Economic literacy speaking, you will come back a changed person. It's on Apple Podcasts, and there's free versions of it to read. It's out there. I think it's pretty much in the free domain at this point. So that's the first thing I want to share with you. Next, in light of all this SBF and Alameda and Caroline news, I want to share this little clip I made with you. This is SBF evading jail over and over again. It seems like the guy has so many ways to escape. And lastly, if you watched my last video, you remember I made this call. I said, when the market starts heating up, you're going to start hearing things like recession canceled. And look at this, I found it. U.S. Treasury Secretary Janet Yellen says, what we have looks like a soft landing. Isn't that comfortable? Isn't that cute? And not only that, but we have Morgan Stanley's Gorman says the U.S. has dodged a recession. Well, isn't that warm and fuzzy feeling? This is basically, to me, a top indicator, and I think we're going to see a lot more of this happening, a lot more reassurance happening as the market gets in a worse and worse situation. Basically, the reason for this is because if you think back historically, have you ever been reassured any time when things were actually bullish, actually doing well? Like when the stock market's rallying, do you get a bunch of reassurance? No, like everyone's like on board. This is amazing. Yes, we're doing great. No one has to like reassure you. But when they start reassuring you, that's the red flag. It's like Do Kwon, steady lads, that's reassurance, right? Well, what happened next? Reassurance is not necessary if the economy is doing fine. I hope you enjoyed this video. Thank you so much for watching, and I will come at you again, who knows when, with another update. Take care.